Padamdev Lau asks, one can easily assess the performance of dividend plans of mutual fund schemes by looking at the declared dividends over the past years. He wants to know how should one assess the performance in growth plans.
Oh, he has got it all wrong. What is wrong in this way of measuring that if your fund is giving dividend, it is doing well? This is a wrong yardstick, because your fund could be doing, might be giving dividend, but it might be doing very poorly. And so the only way of measuring accurately how your fund is doing is looking at the performance, which means at any time period. One is that measuring your performance when you invested, and what is the worth today, and how much dividend you got in between, and what is the worth of that because there could be periodic dividend, whether you are getting a dividend on a month-on-month basis, on a quarterly basis, on an annual basis, or sometime you don't get it. So there is a cash flow to it, and as a result of which, what is the return? So based on dividend, it is not. You just get an impression that your investment is doing well. Come to Value Research Online, type the name of any fund, and look at the performance tab, where you get 3 months, 1 year, 3 year, 5 year, 10 year, 20 year return of every fund. Then you also get the relative performance. What is the return of similar kind of funds, the average of similar kind of funds, which is the category average. Then you get another line, which is the benchmark, the most relevant benchmark for that category, how much it has given. So for example, if you are comparing a large cap fund with the benchmark will be a Sensex or a Nifty. So if you would have done nothing, if you would have just chosen an index fund, how much would the return will be, and how much return is from this fund? So this is the way to measure it, not dividend.
Or he also asked, how should one assess the performance in growth plans?
Oh, what I'm saying is that you should be looking at the dividend plan or the growth plan based on this only. And at Value Research, the calculation of return of the dividend plan, there are two ways in which you can look at the return. One is that look at the fund and go to the specific fund fact sheet and go to the page and you get this return. But the most precise way of measuring, if you have already invested in a fund, is if you're maintaining your portfolio at Value Research Portfolio Manager, My Investments, is that you invested on a given day, then you invested some more on a given day, then invested some other time period. It could be by way of SIP or some periodic investment, or you took some money out on specific dates, then you got some dividend in between. By the result of this cash flow, you invested on many occasions and you got your dividend on many occasions, or you redeemed a part of your investment on many occasions. The result of this translating into percentage return per annum, that is what you get on the Value Research My Investment Portfolio Manager, and that is something which you should look at. That is the most precise way of looking at it. If you are trying to get an impression of it, which is then I think the best impression that you get on Value Research Online is a rolling return, which is an average of a certain, say, 1 year rolling return will mean that we will be calculating the 1 year return every day for the last 1 year and doing an average of it. So what is the likelihood of earning that return? Because otherwise 1 year return will be, as of today, will be 1 year ago you invested 100 rupee, and what is the worth of that 100 rupee today? So this is a very simple calculation. Rolling return will be calculating 1 year return for the last 1 year. So 365 readings, or as many readings in the past 1 year, 250 days or whatever, and as a result of which, and doing an average of that. So what is the likelihood of that? Because this is all past, and that is a better indication of what is the likelihood of what anybody would have likely earned if you would have invested on any average day during the year.
Okay.